No, HIMS did not start selling electric cars, but this might be one of the closest Tesla-style setups we've seen in healthcare growth in a very long time. And it's all about timing. HIMS announced a global expansion acquisition. At the same time, the stock is still one of the most shorted names in the market right now. And this combination really does matter. Good news plus heavy short interest is often how turning points really begin. In this video, I'm going to explain what's happening with this acquisition and why it changes the story and the narrative that people could be buying into. Then I'll show you why the hated stock comeback pattern reminds people of Tesla in 2018-2019 and how short interest can add extra pressure if the stock starts moving up.
Welcome to the game, it's the Instant Stocks by Mikkel Kuhar.
If you're new here, my name is Mikkel and one of the partners here at X10, which enables professional traders to be able to come in and trade in your house for you without you having to feed them, clothe them, and do the dishes for them. We developed a software over the last 4 years that allows them to trade directly through to your account. Great thing is you never have to send money to us. And over the last 4 years, we average 8 to 15% returns every single month. Here's our results from February and January and all the trades we've taken, our results so far. And most people we speak to have lost anywhere from 10 to 30K. On average, I'd say it's closer to $15,000 trying to learn how to day trade. So if you have at least $10,000 to allocate, there's a link below, jump on, book a call. I'll walk you through the entire software, show you all of our members, which is up around 500 now. Remember, we've been doing this for 4 years, perfecting this over the years. So if you want to book a call, find out what it's all about, there's a link below, jump on there and I'll walk you through personally. Without further ado, let's get into the video. First, the news. HIMS announced it will acquire Eucalyptus, which is an Australian-based company, in a deal valued at $1.5 billion. Now, the structure is a big part of the story. They will pay about $240 million in cash at closing, and the rest is paid later, with deferred payments over about 18 months and earnouts tied to performance through early 2029. And that deal is expected to close around mid-2026, assuming approvals all come through. So why does this even matter? Because Eucalyptus is already operating outside of the US. They operate across Australia, the UK, Germany, with newer operations in Japan and Canada. Why is this important? Well, they served more than 775,000 customers and facilitated nearly 2 million consultations. And if HIMS says Eucalyptus has an annual revenue run north of $450 million, think about this coming up to the earnings. If you've watched this video might come out after the earnings, depending how the team goes, but we're going to add another $450 million just straight into the projections of the earnings coming up. So this is not a small add-on. This is him saying we are going international in a real way. Now, the second part of today's story is short interest. HIMS has about 76 million shares sold short. That's about 40% of the public float. Reuters also reported that short positioning got very heavy in January 2026, with a large share of available stock on loan for shorting. So this means HIMS has been sitting in the top bucket around the top 10 on most shorted screeners, though the exact rank can move day to day with fluctuations and things and movements happening. So here's the real picture we want to look at. A lot of people are betting the stock goes lower. Then the company drops big global expansion news. That's when shorts start asking a question. What if the story is changing? Now, when I say the next Tesla, I want to be very clear. I do not mean the same business. Tesla was cars. HIMS is a consumer healthcare. What I'm speaking to is we're starting to see the pattern. A growth stock gets really hated, headlines get really ugly, and the stock gets crashed. Then if the company executes, it slowly turns into a comeback story. The market runs this movie again and again, and it just changes the actors. So if we rewind to Tesla in 2018 and 2019, that era was really rough. You just need to speak to my friend and business partner, Danny. This was the era he was in it. He was in the trenches the whole way through. You may know him from these channels here. He was so certain on the Tesla stock, he put his life savings into it and the rest was history from 2018 all the way through. Now, speaking to him, I know this era was rough. He was deeply invested and the headlines were nonstop. People talked about production problems, cash burn, and whether the company could even survive. The stock also got hit hard in that window using split adjusted numbers. So it traded around the low 20s at times in late 2018, and then later deep lows in 2019, around the low teens, and it felt terrible to own. And that's the point. Great long-term winners often look the worst near the bottom, and at the bottom, you don't get comfort. You get really bad headlines, you get fear, you get people saying, it's over, this is done, this is a dying stock. Now look at HIMS in 26. The headline environment has been nasty. There's been legal and regulatory pressure tied to weight loss meds, and the stock has been hit really hard. We're down 70% over the last few short months from all-time highs, and that's one reason short sellers get so confident. They believe the story is breaking. But this week's acquisition is a different kind of message. It says we are not trapped in one market. We are expanding globally, and we're buying an operator that already has international people in places, systems, infrastructure, approvals. And that's why for me, this can feel like a real Tesla moment. It's a real Tesla type of move. And Tesla's turning point was not one day. It was execution over time. And for HIMS, the similar idea would be proving that it can scale beyond the US and build a broader platform. This deal is basically buying international infrastructure, local operations, local rules, local know-how, and tapping into existing markets already. Now, let's talk about why heavy short interest really matters here. A short seller borrows shares and then sells them. So they want the price to drop. If the price rises, they start losing money. So if it rises enough, some of them buy shares to get out, and that buying can push the price up more. That can pressure more shorts, and that feedback loop is what we call a squeeze. It's not guaranteed. As always, this is not financial advice. You need to do your own research, but the setup becomes more sensitive when short interest is this high. And the turning point idea is very, very simple. When a stock is heavily shorted, bad news is often already expected, so the next bad headline might not shock the market. But one big good headline can really matter more because positioning is really one-sided at the moment. This week's headline is big. It's a $1.1 billion deal on the headline number, with only about $240 million of that upfront and the rest tied to results over the years. So that is management trying to grow while keeping flexibility. The real question now is whether the business can earn that kind of long-term re-rating through execution. And this week's deal can be the first chapter of a comeback story because it adds three things. It adds international footprint faster, it adds real scale from a business with a large revenue run rate, and it adds a new narrative, not a one-country controversy story, a global consumer health platform story. And when the narrative changes, shorts get really nervous because shorts don't just bet on price. They bet on the story staying bad and the headlines to continue in the narrative they're currently pushing. This is why I'm starting to point to Tesla as an example, not because the product is the same, because the pattern is looking like the same rhythm. You know, bad headlines, heavy hate, big short interest, then a real move that can change the direction. Now, the question to leave you with today is, do you think HIMS becomes a Tesla-style comeback story over time? Or do you think the headline risk stays too heavy for this to work? So I'll be making more videos in the coming week breaking down all of the data we're about to get. So if you want to find out more on what HIMS is doing, what they've been doing in the last quarter and the last 12 months, and what their earnings look like, subscribe here and I'll be bringing videos to you daily. We'll speak soon.